You've got a pretty upbeat 2021 GDP outlook for the U.S., better than 5%. You're calling it a vaccine-shaped recovery. How sensitive is that call to what comes before, whether it be, what we're in for the winter in terms of COVID, and also the lack or presence of any stimulus right now? We just saw one of your counterparts at J.P. Morgan say maybe negative GDP in the first quarter.
It's certainly a risk. I mean, I think in the short term, you do have the increase in infections, which continues at a rapid pace. We're starting to see restrictions on economic activity. So far, they haven't been as notable as what we've seen in Europe, where the economy probably is contracting in the fourth quarter already. But I think in the U.S., we'll probably see more of an impact of that. And then on the stimulus side, you're right. We do assume some additional stimulus, even in a divided government scenario. So I think the near term is more mixed. However, as you get into the spring, I think we'll see a very strong recovery, partly because of the vaccine news, partly because I think temperature, which is currently a headwind, obviously, in terms of infections. And I think we're learning how important temperature is for the virus. It's going to become more of a tailwind, and partly because I think fiscal policy will ultimately provide more support. So I think the spring is going to look much stronger.
And how does this latest move with Treasury kind of pulling the emergency backstop funds from the Fed play into this idea of the Fed sort of being there and doing whatever it has to do to support a recovery? Do you feel as if it's relevant? Do you think markets are going to be given pause about this?
Well, I think the Fed still has a lot of flexibility in terms of what they can do. I mean, I think it's important to keep policy very accommodative, and I think backstops are still important, not because I think the central outlook is negative. As I said, our central outlook is quite positive, but you do want to have the backstops in case that we were to see renewed deterioration in financial conditions, and at the moment you definitely don't want that. Having said that, I suspect it's ultimately not going to derail the outlook for an improvement as we get into the spring of next year.
Encouraging news on the vaccine front, Jan. But do you think the market is overestimating how quickly the economy will benefit from this vaccine, just given the logistical challenges associated with distribution and getting that vaccine, not just to hospitals, but to the end consumer?
Well, I think our expectation continues to be that we'll see, rapid vaccination of the population in the first half of 2021, and then by the third quarter, we have a sufficient amount of immunity that outbreaks are no longer the sort of risk that they have been since the virus emerged. So I don't think that the market's too optimistic. We're pretty optimistic. That doesn't mean that there aren't a lot of unknowns in terms of, just exactly how quickly it works, how many different vaccines we will have available. It, obviously looks like there are two that are very promising. Probably we'll have some others. So there certainly, unknowns around this, but the baseline view of having a rapid vaccination in the first half of next year strikes me as reasonable.
What features so prominently in your growth forecast is this expectation that we'll see a sharp rebound in consumer behavior, getting out there, not just back to work, but retail, spending, travel. What gives you confidence that the consumer will come back so strongly? And are you using any of the consensus you're seeing out of China, given that they were first in and out of the pandemic, and now, in some ways, when looking at economic data, back to pre-pandemic levels?
Yeah, I mean, I think the expectation is that the sectors of the economy that are still deeply depressed are going to come back strongly in 2021 when the virus is no longer an issue. And that's not all of consumer spending. I mean, consumer goods spending is already at actually above pre-virus levels, but it's really the consumer services, travel, entertainment, restaurants, personal services, about 8 or 9% of the economy that is still depressed, and where we're still basically missing 2 or 3% of GDP before we get back to the overall pre-virus level. And so we think that's really the part of the economy that's going to be coming back strongly. I would say on China, China managed to get back to pre-virus levels. In fact, they're now above pre-virus GDP levels by suppressing the virus. Obviously, not in the context of a vaccine, but they managed to bring down infections and mostly normalize economic activity. So they've done it in a different way. In the West, I think we're going to be doing it primarily on the back of a vaccine, which is going to have a positive impact on the level of GDP by something like 2% in our estimates.
Shepard Smith here. Thanks for watching CNBC on YouTube.